Hi everybody. In this video I would like to discuss with you about the factors affecting the choice of mutual funds. First, let us discuss about the important elements related with the mutual funds. And here in the first sentence itself I have noted very important element and very important matter related with the mutual fund, that is mutual funds are subject to market risk. You can hear these words, you can hear this sentence while you are seeing the advertisement, because all the mutual funds are subject to market risk. That means there is a risk, and in commerce if there is a risk there is a chance for profit. That is a important element related with the mutual fund, or that is the attraction of mutual fund. There is a chance for risk and at the same time there is a chance for profit. But how much and for how long, that is important. How much is the risk? How much is the return? If the risk is high, of course the profit will be, or the gain will be high. The answer to this question depends on the fund you choose and the purpose of it. There are different purposes, there are different types of funds in the mutual fund. Mutual fund do have risk, but not necessary that always leads to loss. Mutual fund, as I already mentioned, there is a chance for risk, but it doesn't mean that it always leads to loss. There is a chance for profit. But then how to choose the mutual fund which gives profit? What are the factors responsible for choosing the right mutual fund? In this video, we will discuss about the different factors which we have to consider while investing in the mutual fund. First factor, investment objective and the style. Objective of the investment. What is the purpose of your investment? Why are you investing in the mutual fund? This helps them to determine the investment in various assets class that would help and meet the objective. Check if the fund's objective and you are aligned so that your goals are also fulfilled. Choosing a fund with a similar objective make your investment reach its goal faster and better. Suppose you would like to earn more profit within short time, then it will be better for you to choose such type of fund. But if you have enough money and you don't want it immediately, then you can choose another type of fund which will give you more return after a long period, but it will not give long or good return within short time. So your purpose is very important. You may think about creating more profit within short time, or you may think about creating more asset with a long time, or in between. That means maybe less than 5 years or less than 2 years. Anyway, it depends upon your needs. What you want, that is very important when you are choosing the mutual fund. That is why this is considered as a first important element while choosing the mutual fund, investment objective. And along with that, the style of investment. You can invest in large cap, mid cap, small cap, and different types of investment funds are there. You can choose which you feel comfortable and which you feel trustable. And next important feature or next important element while choosing the mutual fund, that is none other than fund performance. This is very important element. The performance needs to be considered because it gives you an idea how it has handled the money in the past over a period of time. That means when you are going to choose the mutual fund, you are when you are going to choose the mutual fund, then you will be getting enough opportunity to check the past performance of the different funds, different companies performance, different NAVs, and different named mutual funds and all. So you will get the opportunity to check the past performance of the different mutual funds. So check it. If you are happy with this particular mutual fund, then you invest in that particular fund. That means if the performance is poor, it is better to avoid that mutual fund. So you can select the best mutual fund. Ensure that you measure the performance over a significantly long period so that you know the pattern and you can make a good judgment. Okay, that is very important. If you make the good judgment, then your money is safe and you will get sufficient return. You may want to look into the kind of risks the fund has exposed you to over a period of time. And next important element, review the various portfolios that was held by them and how often was it churned, how many times it gives good return. They should give you the entire snapshot of the fund's performance. You have to know or you have to study in detail while you are going for investment in the mutual fund, because you will get the data. The informations are available. Next one is about the experience of the fund manager. If there is good fund manager, then your money is with a safe hand. If the fund manager is eminent person, or if the fund manager is highly competent to manage your fund to create good returns, then of course you can assume that your fund is in the safe hand, and of course you will get the good return, because a good fund manager can generate good returns. A fund manager has to keep moving the capital in the direction where the market seems promising. This requires expertise and experience. A well-experienced manager can give you the good return. Besides that, tenor also help you determine how reliable they are. You must understand about the fund manager. You must understand the people who are going to manage your fund. If they have good experience with good track record, then that will give you a good return. The fund performance is largely impacted by the fund manager's expertise. Their experience is very important. And next important factor, expense ratio. This is usually considered when you invest in an equity fund. The higher the expense ratio, the more it affects you directly. It comprises of the brokerage fee and other costs that the mutual fund house charges from investors. Hence, you need to see if the charges are not over the top. But understand one thing, to get the good and experienced opinion or experienced manager to manage your fund, then the mutual fund house may charge a little bit more. But you must be aware and you must be able to analyze whether the charges are compatible or whether the charges are equitable. Whether if you are getting good return, then it is okay if you pay more, no problem. But if you are not getting good return, then quit the fund. And next one. However, there are funds that charge high but make it up by offering a high NAV. That is very important, as I already mentioned here. If they are giving good return, then why don't you pay more as a brokerage? If you are getting good return, then you can think about paying more charge, because you are getting the good experienced opinion and you are getting a safe or safest place to keep your fund, which gives you more return. So you should evaluate. That is important. You should evaluate. Are you getting good return? Then it is okay if you are paying more charges. So consider these all while checking the expense ratio. Check whether the expense is equal to your returns or it is proportionate. And last one, exit load. This is another important thing. Exit load is another cost that you directly incur. It is a fraction of NAV that you receive, thus leaves a hole in your investment value. So the lower exit load a fund offer, the better is it for you. That means after the investment, if you want to quit, then you might be having certain charge or some other elements. Having said that, it is only comes into play if you wish to sell your units. That means you are going to sell your NAV. Sorry, if you are going to quit your mutual fund or sell it, then the exit load will be there. It is always beneficial that you stay invested for a long time to reap good returns. Okay, if you are investing for a long time, that means avoid the immediate exit because it will lead to unnecessary loss. So better to avoid the immediate exit, keep it with you, keep it for a long time, then it will give you a lot of return. That is the peculiarity of mutual fund. And after all, as a conclusion, investing is not something that you can do as a side job. Investing is not something that you can do as a side job. You need to be active and alert if you wish to make money even in mutual fund. You will be able to earn money if you consider it seriously and if you invest your time perfectly and use the above mentioned factors as a checklist to invest. You have to check each and every points which we have discussed here and make the good investment in the mutual fund. And after all, let me repeat the first sentence as I mentioned in the presentation. All the investment, especially in case of mutual funds, are subject to market risk. Thank you.